Some of the questions that have come into me over various times I'm speaking have been, number one, RJ, what are the tax benefits that are going to be going away after December 31st, 2025? Well, I'm so glad you asked. There are a number of things, a few of them that are good, at least good from the perspective that thus in California, New York, New Jersey, the states where there's a significant amount of money that goes out in income tax, Illinois as well, we're capped at how much money we can take as a deduction. It's what's called the SALT limitation, that's state and local area tax. But in this case, there's that $10,000 ceiling that is presently in place will be coming off. So that, again, we can deduct our state income taxes and property taxes and other things that we maybe have limited. But there's such things as what's called alternative minimum tax, which has largely disappeared for most other than just the highest of income earners. That's going to be coming back. And so we're going to see people with incomes in the couple 100,000 range, perhaps being beleaguered and having to pay more in taxes than they were expecting. One of the biggest changes, of course, I've mentioned is that the federal estate tax exemption will be going from right now 13.6, probably 14 million next year, down to anywhere from 6 million to 7.5 million per person, which again, you might say, well, that's probably not going to cover me or will more than cover me. Okay, that's fine. But so the point is it severely limits the amount of money that can go towards philanthropy and other positive differences. So that's something to take in consideration. And there are a number of other things kind of beyond the scope of this time right now because it's already starting to go along. But there are a number of things that will be changing. And so you need to take advantage of it now, between now and really the end of this year, 2024, because the best estate planning attorneys and tax attorneys are already getting their calendars quite full. So there's things that you definitely want to review before now and the end of 2025. I've explained what I mean by capital gains taxes and estate taxes being optional. I mean that most wealthy, affluent Americans understand that, the government gives us a choice in how we support the social well-being of our country. And again, most wealthy, affluent Americans understand we have an obligation to support the social well-being. But most of them are not aware of how we can do that. And unfortunately, most of their advisors are not, or if they do know, they don't bring it up. We do. And again, if you are wealthy and affluent and you say, well, I don't care about charity, charity begins at home. Okay, well, that's a good point. But here's the thing. You will be philanthropic. The only question is, what kind of philanthropist are you going to be? You're either going to be a voluntary philanthropist and choose things that really warm you and your family and that make a difference, or you're going to be an involuntary philanthropist and you're going to send enormous amounts of money back to the federal government and possibly have nothing left to share with your family. And as I said, the government's not going to send you a thank you note. So you're going to be a philanthropist. Just what kind are you going to be? So those are some of the things to be certainly taking in consideration, but as well, it's the non-tax considerations that are important to plan for. It's for your family. It's how to make sure that the guardrails on the bridge, once those are gone, how do we keep the family and the legacy together? What kind of resistance do we see from IRS to some of these ideas? Well, they're not crazy about them. Particularly the valuation adjustment rules have seen some consternation on the part of IRS, but they've now come back to say, okay, as long as you stay within these parameters, we're okay. 30% valuation adjustment, okay. We're just going to give that and we're going to live with that. Now, if you're coming in and asking for a 70% valuation adjustment, we're going to fight you on that. So it's like the saying, pigs get fat, hogs get slaughtered. Let's take time to make sure that we can approach things on a basis that's conservative, but we can do amazing things even with those parameters. In terms of flexibility, I think I've already identified that a little bit, but because we can adjust the income stream coming out of the PPTs, the same with the LLC, we can adjust the amount of income that comes out from the limited liability company where we push those assets into a trust that is off IRS's radar screen. That income stream can be adjusted just depending on what expenses we run through that LLC, or if we buy new additional real estate, or if we leverage more. So it's not quite as easy to adjust that as we can with the PPT, but nonetheless, there's a great deal of flexibility. Same thing with the Family Values Trust. So in wrapping up this case, so hope you've enjoyed this, hope you found some ideas helpful. And again, feel free to reach out to us. Wealth Legacy Group, you can reach us on 858-569-0633. That's 858-569-0633, or shoot us an email, info@wealthlegacygroup.com. And feel free to ask us questions if there's something we can do to help. We literally work all across the country, or we can refer you to other advisors that might be closer if you wanted to have somebody right there that you can see. It's surprising to me how many people just say, look, we want the best ideas, and it doesn't matter that you're in San Diego. In fact, one of the great things about having an advisor in San Diego is that you can fly out to San Diego and have a nice trip and go see your advisor, and probably write off some, in case there's an IRS agent watching this, note that I did say some, emphasis on the word, write off some of the trip, at least for part of it. So anyway, thanks so much for being with us. Again, I'm RJ Kelly. Delighted you join us. Hope you check. We've got a couple more cases to run by you that I think you're going to get something from as well. Bye for now.